Thank you very much, Sim, for making the time to chat to me. So basically, the interview it's just around some initiative for NWU, Northwest University, where I recently have obtained my PhD. So they're just running some initiatives, talking to different leaders on different subjects, right? And then I wanted to talk to you around some different questions. So one of the first question that I want to talk to you about is, as a CEO of Africa's largest bank, right? How would you describe digital transformation in general and in the African context?
Yeah. So, Michael, the phrase "the fourth industrial revolution" is one which is used by most people, and it's probably overused, but it's a very useful concept and useful phrase. As has happened in other industrial revolutions, if you think about the industrial revolution in the United Kingdom happening in the 19th century, new technologies change both the absolute and relative prices, and they therefore enable really radically new and diverse and expanded forms of production. That's what happened with the steam engine, the spinning jenny, the boats, and so forth, which had a dramatic impact on the Industrial Revolution. The same will be the case here in the Fourth Industrial Revolution. So the Fourth Industrial Revolution has, in essence, dramatically reduced the price of data processing and data transmission. You would know that as an engineer yourself.
Yeah.
And I mean, these are things that seemed impossible 20 years ago, and today we take them for granted, right? So in 2001, for example, if you'd said that it would be possible to stream live videos, if you'd said it would be possible for you and I to be having this interview the way we're having it now, I think people would have laughed at you. They would have thought that you'd taken leave of your senses. So the Fourth Industrial Revolution is also similar to previous industrial revolutions in another very important way, in that it takes a very long time for society and organs of civil society and business and government to understand and apply the full capabilities created by new technology. So you end up with what you academics call the productivity paradox. In other words, just as the steam engines and electricity took a generation or two before their effects were seen in GDP, so far the effects of the Fourth Industrial Revolution are also fairly modest, right? In a similar way to how long it took for the steam engine to have an impact on productivity. We're all sending many more emails and attending many more online meetings, and as I say, just like the one you and I are having now.
Yeah.
But we're not a hell of a lot more productive than we were in the 1970s or 1980s, right? We still produce output at a similar level. But I'm sure that this will change. If you just think about the impact of expanding digitization and mobile penetration on Africa, you would know, Michael, that GSMA predicts that the number of people with connections will rise to 500 million. Well, it's doubled to 500 million in the last 10 years, and that by 2024, 1 billion people will have these connections and connectivity. They also predict that by 2025, there'll be close to 500 million mobile internet users on the continent. I mean, that fact has got profound implications. You and I know, because we work for an institution that operates on the continent, the African continent is getting healthier, wealthier, and therefore more productive as a consequence of the improvement in soft infrastructure, and the hard infrastructure that GSMA is referring to will accelerate that development, and therefore the continent will continue to grow faster than the rest of the world.
Okay.
Let me maybe stop there.
Yeah, thanks for that insight. I think you mentioned a lot of facts that are out there that I'm aware of, and yeah, I think the more and more people that are going to be connected, the better actually for the economy. And I would be dreaming also in my high school days, if I thought we can have a meeting like this, I would be dreaming if we could work from home in a period like this, right? For me, yeah. it was nearly impossible, but it just became possible as the technology advanced. You know, I mean, having worked for such a bank, I could realize that the technology it's at a very, very advanced stage. I mean, we spent close to a second year working from home. I mean, it has never been something that I could think of, right? So I think, yeah, transformation has really taken place, especially in Africa and around the world. I mean, we still transact, we still talk to our colleagues around different countries around our day-to-day tasks, and what makes it possible is this transformation that has taken place. So I think, yeah, Africa is in a good space to be part of this digital economy. Africa is at that advanced stage. All we need to do is to make sure that people keep learning, people keep adopting these technologies, so that we get better. We get better in business, we get better in our personal life. So moving along to my second question, like considering that 4IR is the main driver, right, for digital transformation, how would you describe digital transformation from a banking perspective, like in Africa?
Well, again, since you and I are colleagues, you would know that it's very relevant. We think that financial services is going to be completely transformed by digitization. And that's why we're so focused on modernizing our business to ensure that we can compete successfully in this digital age.
Yep.
Michael, our clients' expectations are increasingly set by the likes of Amazon and Alibaba. And we're very much aware of the growing presence and ambitions of telcos and fintechs in Africa in financial services. So they're looking to eat into the payments and value and the profit pools that exist in financial services. So to compete with them on the continent and to win, we'll have to ensure that our clients are served with systems and processes and products that are just as stable, just as personalized, and just as convenient as the user-friendly stuff that they would get from the likes of MTN, Safaricom, or Alibaba, or Amazon, for that matter. So for that reason, over the last couple of years, we've made massive changes in our organization in order to serve our clients better. We've reconfigured the relationship between the group as a whole and our subsidiaries, so as to enable them to respond more quickly and more precisely to our local clients' needs. So let as many decisions as possible be made at the coalface, at the client interface. In that same period, we've worked hard to introduce new ways of working, which you would know about, creating a work culture and habits that emphasize speed, suppleness, and collaboration. Speed, agility, and collaboration.
Right, yeah.
We've done this for three main reasons. Firstly, and most importantly, this is to provide our clients, whether they be an individual or a large corporate or a big government, to provide these people and organizations with a comprehensive range of financial services in a seamless way, without expecting them to navigate the internal complexities of our Byzantine organization, right? Second, in order to reduce time and cost to serve, reduce the cost of product and service delivery. And third, to enable us to innovate much more quickly and efficiently in the service of our clients, especially by creating new partnerships and new services, because partnerships in a network environment are fundamental to our UNFP business. Thank you, Michael.
Oh, thanks. Yeah, I think that's a great answer to that, because I think also the mechanisms we've introduced from the leadership in the bank, right? They also help us with the time to market. You know, we can quickly take products out there to the market. I can imagine if we were stuck with office culture only, we're just going to be stranded right now as a bank in terms of revenue, in terms of a lot of things, because we couldn't move around, especially in terms of level 5. I could imagine what would the continent been going through if it has not been for this our technologies and digital transformation, right? Because it's very relevant to the banking sector. It enables a lot of things within the bank, and it makes the bank sail through these tough times. And then the other question I have is, what is your approach in leading digital transformation in Africa?
That's quite interesting, Michael. I mean, in answer to the previous question that you just asked, I made reference to partnerships and networks. And I think the answer is embedded in that, which implies a change in leadership style, right? Less hierarchy, more horizontal, more partnerships, more relationships than command and control and hierarchy. Indeed, also in your relationships with your clients. You know, you don't just shove products down your client's throat. You don't shove solutions down your staff's throat, you partner with them. Now, that's very important for us because a few years ago, I would have said to you that financial services firms were absolutely terrified that they were going to be blown out of the water by the fintechs, the telcos, and the big techs. And I'm sure that could still happen, right? But I'd be very worried if, for example, Ant Financial Services started to develop a major presence in Africa, which I'm sure, as you've seen in announcements, they are working on. But in the last year or two, I'd suggest that a different picture may be emerging, in that our interactions with fintechs and big tech businesses have suggested that they are looking to partner with us, at least as much as we would want to partner with them, and much less compete with us. So they're looking for solutions where we can work together rather than in competition. And I think this is the way to go.
Okay.
But, you know, to the extent that we need to compete with incumbents, new entrants, and adjacent industries, I would say to you that that is excellent for customers. And rather than push against that, we at Standard Bank believe that in a network world, it is a good thing to partner with others, even your most mortal competitor, the incumbents and adjacent industries, because this is in the quest to find decent solutions for your clients.
Okay. Yeah, no, I get you. The key word there is partnership. I mean, I've seen, because I mean, if you want to become a platform business, you're not going to be doing it alone, especially in the continent that we're in, because there's connectivity challenges in this continent. So for you to have a platform business, you're going to have to partner with people who are strong in what they do, right? Especially from connectivity perspectives. Across the continent, and it will make your life easy, because it is going to be very difficult for one organization to go and build their own infrastructure across the Africa if they don't make use of the partnerships that are there. I mean, if something is there, what's the use of you starting something new while you can just partner with them and have a business deal and deliver to your clients there? Thanks for that great answer, and I get the keyword is around partnership, which enables us, which moves us forward. And then, what is your view of banking in Africa? Like 10 years from now, what would be your view around that? I mean, considering things like your artificial intelligence, machine learning, and Internet of Things. Are we, are we going to have robots taking our cash? I'm considering such things. Yeah.
Yeah, I think, I mean, the answer I think is complex. I think, and I'm no expert in this, just for the record, I'm a failed lawyer, not a technical person, but there are two things I think that are important, and that is your ability to use and extract insights from data. So that, I think, implies a wider range of routine and semi-routine tasks which can be automated by your ability to use these things, and that businesses in that context can therefore market much more precisely and in a much more rifle way rather than spray and pray, providing personalized services to clients. So artificial intelligence and machine learning, I think, will continue the trend of lowering the price of data processing. There's no question about that. I think the Internet of Things also continues the trend of lowering the price of data processing. And I think it also reduces the price of data transmission, right? And IoT enables, I think, a fridge, for example, to essentially be a node in a network transmitting data to a bank and to your supermarket. And I have no doubt, Michael, that in the reasonable near future, people will expect that their fridge is going to keep itself stocked, God forbid, removing all the time and expenditure that one needs, planning, grocery. So in other words, that smart fridge isn't just going to keep things cool, it's going to save you and I time to solve quite complex problems. I think it'll aim to keep you well nourished and healthy, which is important. It'll keep you fed and will keep you working with your medical insurer and your doctor and reduce the cost of your medical aid, for example, I would have thought. It'll also probably work with your bank and with your retailers to save you money. So I think it's reasonable to think that successful financial services businesses will fit into networks of the sort, ecosystems that you made mention of. And ecosystems, as I said to you, imply partnerships, isn't it? And we also think that financial services businesses will want to create their own ecosystem. We have, as a business, started to build out, based on our solid foundation in financial services, building out systems and processes that meet our clients' needs on the digital platforms that we've built, where clients are shopping, socializing, and doing business. In this sense, we say that at Standard Bank, we say that we don't just want to be the shop. We want to be the more, right? We want to be more than just sell stuff to people. We want to actually be the more. Yep. And in that sense, we want to be the single convenient destination where people and companies can find the products and services that they need and find them quickly and conveniently. And our ecosystem participants must find this convenience, but we also want to be an attractive shop in other people's mall, which is why I was saying we're quite comfortable working and partnering with our competitors. Our existing partnerships that are extending beyond financial services include a proposition called Trader, which we do with an organization called Nomani. We will provide airtime and stock for micro enterprises, as well as transactional services and credit for them. We have Look-See Home Services, which is, amongst other things, a platform that provides information on properties and neighborhoods. Then we've got Trade Suite, which connects importers and exporters and logistics providers. We have something called One Farm, which puts together, the agro industry. We have something called Power Pulse, which connects between electricity generators and purchasers and financiers. We have something called One Hub, which does consumer behavior analysis, biometric identification, and provides these services to people that are part of that ecosystem. And so we cover then ecosystems, in home services for the global citizen, for traders, in agriculture, in trade, in fleet, in education, in mobility, in energy, and in health. And Michael, I should just add that whilst we will be participating in these ecosystems which are adjacent to financial services, we remain at heart a financial institution. Thanks.
Okay. No, thank you for that great answer. I don't want to prolong the interview. I think my last question to you is, in your view, what can universities do to prepare students for the future of banking in Africa?
Well, You know, I still think that the traditional commercial skills will be necessary. So I would say universities do still need to train excellent accountants, lawyers, marketers, general business managers, and so on. But I think we also very much need great computer scientists and engineers. You know that our country is short of engineers. I think we at Standard Bank are working towards being an ecosystem business that I just told you about in the last question. We want to be a mall. And if you want another analogy, not just a mall, but a solver of problems for clients. And as a result, we're increasingly in search of behavioral scientists and experts in designing client experiences. So in addition to the specific skills that I'm alluding to, I think there are 4 human skills that are becoming increasingly relevant and valuable in the digital age. And that is critical thinking, imagination, creativity, and most importantly, Michael, empathy. So I therefore think that universities should also continue to train young people in the humanities and social sciences and ethics. And I think they should be encouraging even the most technically minded people like you. They should encourage them to have a look at the humanities and do at least, let's say, 1 or 2 such courses: sociology, philosophy, ethics. I think people will find that these topics and these subjects are incredibly useful in people's careers.
Okay, thank you for that. I think I will take one of the courses around empathy because I'm an engineer and I'm also a leader because I run a team and I'm also from an engineering mind. So I've got to have empathy when you're working with people because you deliver through them and they help you reach the team goals and stuff, right? I think, Sim, thank you very much for participating in the interview. I think our topic was digital transformation and 4IR readiness in African banking sector. So we did cover those questions around that. And I wanted to say thank you for making time. And I hope we'll get to talk soon after the pandemic. Maybe we'll have coffee someday, I don't know. But that's my hope.